Is the house of cards built by tech's most controversial billionaire finally collapsing? Recent evidence suggests his business empire, once considered untouchable, faces unprecedented challenges across multiple fronts. Harvard Law and business professor Mihir Desai recently published an analysis suggesting this tech mogul's wealth isn't built on sustainable business fundamentals, but rather on what he calls a financial cult. While Tesla stock has increased over 50% in the past year when viewed long-term, this doesn't necessarily reflect business health. As NYU's De Modern argues in Narrative and Numbers, company valuation bridges stories and numbers. Every valuation number has a story, and every story becomes a valuation number. Many investors don't value these companies based on current performance, but see them as venture capital funds managed by someone with a reputation for investing in cutting-edge technology. These enthusiastic investors aren't concerned if today's profits don't match stock prices. They believe revolutionary products are perpetually on the horizon: solar roofs, humanoid robots, tunnels, rocket-powered cars, artificial general intelligence, or Mars colonies. These promised innovations supposedly will generate such massive profits that skeptics will be silenced. The Harvard professor notes that despite building an automobile company from scratch, no small achievement, the billionaire's fortune largely stems from investor devotion so intense that merely mentioning new ambitions drives stock purchases. The grander the stated goal, the more wealth and power investors hand over. Since his political involvement intensified both domestically and internationally, cracks in his business ecosystem have become increasingly visible. Tesla's automotive revenues and profits have declined, and after 22 years in operation, questions remain about whether it can ever generate significant free cash flow for shareholders. The company appears increasingly dependent on price cuts, a strategy that might boost short-term sales but risks long-term brand damage. Political backlash is hurting sales, and perhaps sensing changing sentiment, he's been repositioning Tesla as an AI company to maintain investor enthusiasm. The professor's assessment of his other business ventures is equally concerning. SolarCity has deteriorated since Tesla's controversial acquisition in 2016. The Boring Company shows unclear revenue prospects. Neuralink profit potential seems increasingly remote. Twitter Now X has declined economically and culturally since acquisition. Eve SpaceX, after more than 2 decades and approximately $12 billion raised, is only now rumored to have possibly achieved $12 billion in annual revenue, primarily from Starlink, which doesn't necessarily translate to profit. His wealth doesn't derive from business cash flow. More capital has entered these ventures than they've returned in profits. Instead, his fortune stems from stock valuations driven by personal hype and faith in forthcoming breakthroughs. Recently, this hype machine has faltered as growth stagnates and competition intensifies. One vocal Tesla investor has even suggested he step down as CEO. While Tesla's stock nearly doubled after Donald Trump's election victory last November, driven by optimism about the tech leader's political alliance removing regulatory obstacles and potentially securing government contracts, numerous legal challenges loomed. A criminal fraud investigation regarding self-driving claims, SEC and DOJ investigations into company resource misuse, battery range misrepresentation allegations, multiple vehicle safety investigations, labor practice cases, discrimination inquiries, and worker safety investigations. The new administration replaced officials overseeing many of these investigations, and according to reports, staff reductions occurred at several regulatory agencies. When questioned about potential conflicts of interest, he stated he would recuse himself where appropriate. Despite regulatory pressure potentially easing, he recently admitted experiencing significant difficulty running his businesses. Tesla's post-election stock gains evaporated, and consumer backlash proved so severe that the president publicly purchased one of his vehicles while praising it, presumably to boost declining sales. The European Automobile Manufacturers Association reports Tesla sales in Europe fell for consecutive months while overall EV registrations grew. European sales have dropped over 40% year-to-date, with market share collapsing. Kelley Blue Book data shows Americans registered 11% fewer Teslas in January compared to last year, while registering 44% more EVs from competitors. In China, Tesla sales reportedly plummeted 49.2% year-over-year, while competitor BYD saw a 90% increase. Australian EV Council reported a 70% sales decline in February 2025 versus February 2024. The UK provided a rare bright spot with 20% growth, while Canadian sales data showed suspicious activity with 8,600 cars allegedly sold in just 3 days across 4 dealerships as an EV rebate program ended sales now under government investigation. The refreshed Model Y recently became available but reportedly shows same-day delivery availability, suggesting demand isn't robust. Cybertruck quality issues have become fodder for jokes, with parts reportedly falling off vehicles. At a recent all-hands meeting, employees were advised to retain their stock despite board members selling millions worth of shares according to regulatory filings. Approximately half his net worth is tied to SpaceX, which owns Starlink. The satellite service has been installed at the White House, and administration officials have reportedly explored replacing an existing $2.4 billion Verizon contract with Starlink funding. However, his political activities have complicated global expansion. Ontario cancelled a $100 million Starlink deal in response to US tariffs, while his controversial behavior has created adoption challenges in Brazil, Italy, and South Africa. European nations, concerned about US threats to cut off Starlink access in Ukraine, a service funded by Poland, are considering a European alternative for security purposes. While reports suggest Twitter is now valued above the $44 billion purchase price, many investors question this valuation given declining user numbers and advertising revenue. The transaction valuing the business at $45 billion involved another of his companies, XAI, purchasing it, a transaction one insider described as containing wildly adjusted earnings figures. Anti-billionaire protests have occurred at Tesla showrooms globally, with some Tesla vehicles and charging stations vandalized. A UK survey found 70% of Tesla owners report feeling ashamed of their cars, not necessarily due to strong feelings about the CEO, but because driving a Tesla is perceived as a political statement. UBS analyst Joseph Spack notes that among high-income consumers planning future EV purchases, Tesla now ranks lower against competitors than a year ago. While the brand has gained popularity among Republicans and conservatives, moderates and liberals, those more likely to consider EVs, are being alienated. The future remains uncertain. Tesla investors previously justified its outsized valuation by predicting a 100% EV future with minimal competition. Today, both assumptions face challenges as ICE and hybrid vehicles show resilience and competition intensifies from traditional automakers and Chinese manufacturers. BYD recently unveiled fast-charging technology, adding 250 miles in 5 minutes, matching gasoline refueling convenience and outpacing Tesla. While Tesla completed regulatory approval for its Chinese full self-driving software costing $9,000 extra, BYD launched competing technology at no additional cost. Tesla stock has stagnated since joining the S&P 500 in December 2020, while the index has nearly doubled. Barron's recently questioned its place among high-growth Magnificent Seven stocks, noting it trades on future hopes rather than present dominance. Global trade tensions create additional uncertainty. Though new US tariffs may benefit Tesla domestically by hitting competitors harder, retaliatory tariffs could impact international sales, which represent most of their business. Political entanglements make valuation increasingly difficult. The Washington Post reports he and his businesses have received approximately $38 billion in government contracts, loans, subsidies, and tax credits over 20 years, with nearly two-thirds committed in the last 5 years. This government support could increase with political connections or collapse if alliances shift. Tesla remains valued at roughly 100 times projected earnings, far exceeding other automakers' valuations, suggesting investors still anticipate technological breakthroughs and rapid growth despite mounting challenges. What do you think about the future of this tech empire? Leave your thoughts in the comments below. And if you found this analysis valuable, please subscribe to our channel and share this video with friends interested in tech and business developments. We'd love to hear your perspective.